Now, I want to switch gears. Okay, we've covered all that. I want to go into one of my favorite topics, Bidenomics. While it's perfectly true that the third quarter recent months, at least in terms of GDP, was a stronger economy than expected, okay, it's also true that inflation rates have come down, undeniably true. President Biden and his staff, however, are mystified at their continued basement-level economic polls. I mean, recent polls show Biden's economy is rating at just 21%, with 78% saying it's in bad shape. Now, President Biden's blaming the media. Ha, ha, ha. But he should blame his own policies. Right at the start of his term, he front-loaded massive federal spending, regulations, and his socialist Green New Deal war against fossil fuels. The result, skyrocketing inflation. Now, after 2 years of root canal interest rate hike tightening by the Federal Reserve, yes, inflation has eased. But the legacy of Bidenomics' mistakes lives on. It's about plunging affordability. Here's an example. According to the U.S. Bureau of Labor Statistics, real average weekly earnings back in January 2021 was $399. So we're talking about middle-class working folks, probably blue-collar. Now, in November 2023, the most recent, that same measure of real average weekly earnings stood at $380. That's $19 or 4.7% less than 3 years ago. And as if that weren't bad enough, demoralizing the economy, the level of consumer prices has gone up 17%. So, our middle-class family has lost over 20% of purchasing power under Joe Bidenomics. They don't buy and sell GDP. They don't live on year-to-year inflation rates. It's the falling level of wages and the rising level of prices that has caused high anxiety over Joe Biden's economic policy. That's the key point. Affordability has dropped significantly over the past 3 years. During the Trump years, by the by, with tax cutting and deregulating and drill baby drill, middle-class family incomes went up at least, now this is pre-pandemic, they went up at least $6,000. But measured the same way, middle class fell roughly $4,000 under Bidenomics. Now, there are a lot of other issues out there in the economy. Despite some recent good news, in the 2-year post-pandemic, really, the Biden economy has only averaged 1.7% growth. That's all. The Consumer Price Index, which has definitely slowed year on year to just over 3%, and that is good news. The fact remains, in the last 2 post-pandemic years, the CPI has still averaged 6% at an annual rate. Now, consumers continue to lean on credit cards, and they're shaving off their savings in order to spend post-COVID. But that game may come to an end sooner than you think. I mean, the Conference Board's index of leading indicators has fallen 20 straight months. The Treasury's interest rate curve is way upside down. Short rates far above long rates. Manufacturing has been negative for over a year, as has business investment. Maybe more importantly, manufacturing jobs have virtually dried up, even though government jobs have been leading the employment parade all this past year. But principally, it's the plunging affordability crisis that has plagued Bidenomics from day one. And unless and until he changes all that, that's going to be a feat that will be mighty hard under his current ultra-liberal, big government collectivist policies. Unless he changes, working folks are going to bury him in the polls come November. And that's my riff.